In this video, we're going to look at how do we within Power BI build out a cash flow model such that it presents in a manner that we as a company or corporation would like to see it, rather than in the default format that Power BI tends to give us that type of information. The default format normally looks something like some sort of alphabetical sort or indeed numerical sort. So what we're looking at here is a dashboard, and the dashboard we'll pay attention to this matrix here. The dashboard is really just our cash flow, and it's split into three key areas: our cash flow from operations, our cash flow from investing activities, and our cash flow from financing activities. And within each of those areas, it's further subdivided into our cash receipts within operations and our cash payments out of operations. Indeed, the same for the other two activities. And then the sum of all of that, so our net cash flow for instance, operations, which would be our receipts minus our payments, will be added to our net cash flow from our investing and indeed our financing activities to give us a net increase or decrease in our cash flow for the year under review, which then we will look at adding to our opening cash position to give us a closing cash position, which in turn will end up being our opening cash position for the following year, which we will then go through the same process and see if we've got a positive or negative net cash increase or decrease, which we will add to our opening position. And again, we have a closing position, etc. So that's what we've done, but we've presented it in the manner that we want to see it in. Then we've taken this same information and built out a couple of other sort of matrix and indeed visuals to allow us step into the information a little bit more. This here is really just a summary of the key items, our net cash flow position, so the key items here, etc. And this is done with just the aid of a visual filter, taking essentially what we've got here and applying a visual filter to it. And then we've taken the same information, but we've done a donut chart type look, whereby we're looking at our cash in and our cash out, again using visual filters, which we'll discuss later. And then we've stepped into each individual area. So for instance, you'll see for 2018, which is the year under review, these are our slices here on the right hand side. For the year under review, we'll see that for cash in for operations, our operating activities was 1.4 million, which is the amount here. If we summed all of this up, which we may do in terms of the model we build, if we sum all of this up here, then that would be our cash out for, again, operations for the year under review. And then, of course, that's subdivided to give you both a total amount and indeed a percentage of the total amount to see how we're doing in terms of our spend. And then, as I say, we've got our slices and we've got our key numbers here. So that said, let's actually look at the logic behind this. And so in this video, we're going to look at four key areas in terms of logic. Firstly, we're going to look at the model structure and setting up some virtual relationships based on the structure that we have. Then once we've done that, we're going to step into and build out our format, the matrix that we want, such that the matrix that we saw, if I can pull it up very quickly, the matrix that we saw here, we want a matrix that allows us build out and house the measures that we want to look at in the format that we want to see it in. And we have to format the matrix in order for us to use the measures that we're going to build out in particular ways. Thirdly, we will look at our measure build out, and really we'll look at that under three key areas. One is looking at how we build out the treat as measure. Then we'll look at building out measures for cash paid, cash received, and indeed our net cash flow based on the three areas: operating, finance, and indeed investing cash flow activities. And finally, we'll look at preparing an opening and closing balance within the cash flow model. And then once we've done that, we'll look at, well, how do we then take this information and build out some charts that give us some more visual on the same information. That said, let's step right into step one. So step one, we're looking at the relationship view, the tables that we're going to use to build out the cash flow model, and indeed looking at the treat as values function to build virtual relationships. So firstly, let's focus on what we're seeing here, which is what we're seeing here is the relationship view within the back end of Power BI. And it's split into 4 key areas. Firstly, we've got our lookup tables designated with a D for dimension. Then we've got our fact tables designated with an F for fact. Then we have some supporting tables designated with an S for supporting. And then, of course, we have our various measure tables designated by number. And the key items to focus on here would be the red boxes, because this is our cash flow here. This is our cash flow fact data table. And this here is our cash flow template. And what we want to do is take the template here that we've built out. So we physically built this out in a manner that we as a company or corporation want to see our information. And we want to superimpose the template structure here onto what we have in our cash flow data table. Keep in mind that we don't have a relationship between our data cash flow table and indeed our dimension tables. And there's a couple of ways around that. We can quickly harness a relationship by changing the year dimension within our data table and change it from text and make it a date item, and then connect this to our ddates table. We could look at doing that, or building a second table within Power Query, a cascading lookup table, whereby we take our ddates table, we take a reference copy of it, and we end up removing all columns apart from year, and then remove all duplicate rows within that same table that we've now referenced, and then use that as a cascading lookup table that would sit up here, which we would connect to our ddates table, and indeed through to our cash flow table, ensuring that we actually hide the year dimension within the ddates table once we've done that. However, we've decided to do something else, and we'll look at that in a moment. We've used treat as. Now, looking at both of these tables, this is the table view. We've come out of the relationship view. This is the table view of both of these tables. So what we're seeing here is our cash flow data table. And our cash flow data table was a much longer table, which in Power Query we have unpivoted to present it in a manner that just shows all dates in one column and indeed all values in another column. So we've taken it from a human-friendly to a machine-friendly format. So this particular table is presented here. And what we're looking at here is really 3 distinct type of data. We have our cash flow categories, which is really our cash paid or cash received, our cash flow type, which would be the operations, the investing stroke finance. And then finally, we have our subcategories, which is each individual item of expense or receipt in column 3. So that's our first block of information. Our second block would be year, and then our third block would be the values. And then as we step into our cash flow templated table, that's what we're seeing down here. This templated table, a couple of columns. Key column would be our cash flow item column, and this cash flow item column is mirrored in two dimensions. Here we have it presented in the manner that we wanted, i.e. the indentations and the spacing between the information, because this is what builds out the matrix that we just saw earlier. And then the second column, which is a mirror image of the same, except it's normalized. There's no indentation. This is the column from the templated table that we'll use to build out the majority of our measures, because Power BI would get very confused with this sort of format. It wouldn't understand it, but it does understand just a normal text column that we see here with no indentations. And perhaps the third most important row here would be our row index, which sorts this information in the manner that we deem we want to see it as a company or corporation. So that said, bear in mind that we don't have a relationship between our cash flow data table and our lookup tables, and we want to build that. And by building that, and we've built it using treat as, essentially we've pulled then a table, a data table that is not actually within the model, i.e. within the model and connected from a relationship perspective, we've now actually pulled it into the model using virtual relationships. And we've done that down here. Hopefully you can see it. And all we've done is we've done a simple aggregate function, aggregating the value field here using sum. So the aggregate field of our data cash flow table, we've aggregated it, and then we've actually used treat as values function, which is essentially what we've done is we said, look, let's step into the year column of our D dates table here, and keep in mind that when we step into this table, because of different granularities, we have our primary key within our D dates lookup table would be on a daily basis by date. Our year column is not our primary key within our D dates table, and therefore we're going to have repeating rows within that year column. So we may see 2015 100 times, 2016 maybe 300 times, because it's not the non-primary key within the lookup table. So what we're doing with this treat as function is we're saying, look, let's actually look at our D dates year column, which is a non-primary column within our D dates table. And let's actually remove all repeating items. So in this instance, we'd only have one 2015, one 2016, one 2017, etc. And then we use that to actually allow us build a virtual relationship between the D dates table and indeed our year column within our data table, which is this column here. And therefore now we have a virtual relationship that engages only when we use the measure. Hopefully that makes sense. So that is step one in terms of the logic. Step two is actually building out formatting the matrix. And let's actually have a look at that. It's a two-step process. We want to firstly format the table, and then we want to convert a table into a matrix and format that as well. So let's look at the first bit, which is this bit here, which is formatting the table. So what we've done is we've taken the row index and the cash flow items from our templated table that we just looked at in the last slide. We've put that into a table. So we're looking at the table icon here. And then we've ensured that for this column here, the row index, by clicking on this down arrow, we said, look, don't summarize this column and show items with no data, such that when we have no data, it doesn't collapse that line. It actually shows us that line because we want to break in the information to be visually more appealing to our users when they actually review the cash flow. So that's the first thing we've done. And once we've done that, while still in our table, we've said, let's actually step into both the format section. We said, look, let's remove the word wrap from both our column headers and our values sections so that it doesn't influence the table. When we've done that, then we've converted the table into a matrix. And once we've converted it into a matrix, we've actually made a couple of adjustments to the matrix now. And the adjustments that we've done, again, stepping into the format section here, is we've changed the style of the matrix to have no style. Then we've looked at our column headers, our row headers, and indeed our value section, and ensured that the word wrap is switched off for those three items. Then we've also looked at our row headers and ensured that the stepped function is actually off, so that we don't have a stepped function within the matrix from a hierarchical perspective. And then we've looked at both our subtotal and our grand totals and ensured that for rows and columns, they're switched off as well. And then finally, we have hidden this row index because we no longer need it. It's only there to actually organize our data. And we've drilled down to level 2 because now we're in a matrix. Both our row index and our cash flow items, they will appear as within a particular structure, row index first, then cash flow items. So we've drilled down to the second level here whilst hiding this column within the matrix. Okay, so that was step 2. Step 3 would be building out the measures. maybe we'll do that in a second video. So let's hold it at that point and we'll build out a second video. So our third step is measure build out. And within measure build out, we're looking at building three key types of measures. Firstly, and we discussed it in step 2, using the treat as values function to actually engage the fact table within the model. Then secondly, we're going to look at building out a number of measures for cash paid, cash received, and indeed the net cash flow position for each of the three areas within the cash flow operations, financing and investing. And then we'll look at building a start and end cash balance for each of the years under review. That said, let's actually step into the detail. What we're looking at here is our measures, and beneath it would be the tables associated with these measures. So we discussed this just a while earlier. Essentially what we're doing is we're doing a simple aggregate function of the value column within the data, the cash flow data table, this one here, and we're then we're filtering it based on a treat as value function for the year dimension of the ddates lookup table, allowing us build out a one-to-many relationship, because this treat as values function has now removed any duplicates for the year column within the ddates table. What we've done is we've taken the fact table and pulled it into the model anytime we use this measure. So that's step 1 from a measure perspective. I suppose step 2 from a measure perspective is we're building out a combination of a number of these measures: our cash received, cash paid, and indeed net cash flow. So let's look at a sample of one from each section. So our cash received from operations, what we're doing here is let's actually look at, we're using a simple calculate function, looking at the measure we have just developed here, cash flow value. And what we're then using is an iterator filter to iterate through the data table for cash flow, looking at the cash flow category column, which is this column here, and saying that when this column here equals cash receipts from, and when the column type from the data table, so when this column here equals operations, then essentially collapse the table, the data table. So we would collapse the table based on operations, and secondly, cash receipts from. And that will give us a much smaller table. And once that smaller table has been engaged, then we would use the calculate function to calculate our value, which will be over a much smaller table and give us a much smaller number. And that number will reflect a cash received from operations. We'll do the same for finance and the same for investing. And then from a cash paid perspective, it's essentially the same logic, is that, again, if we step into the second part of it, we're filtering an iterator on a row-by-row basis, the cash flow data table, looking at the category column, which is this column here, and we're filtering it now for cash paid. So we're filtering this column now for cash paid, and we're also filtering it for, again, operations in this instance. And so once we've filtered the table for operations and cash paid, we then would calculate, or Power BI would calculate, the cash flow value measure on a much smaller table, giving us a much smaller figure, and that would be cash flow paid for operations. Do the same for financing and investing. And then this is just a netting off procedure, whereby we end up taking the measures we've just calculated for each of the three areas. So net cash flow from operations would be cash received from operations, which we've just calculated, plus cash paid for operations, which would be this one here that we've just calculated, and we're just going to add one to the other. Note how your numbers are presented within the cash flow. If they're all positive, then of course you would expect to see a minus here or a negative here, but the way ours is structured, our numbers are positive and negative, so this is a plus. So we do the net cash position, and then this here is just looking at the net increase or decrease in our cash position by taking the three measures that we have just calculated from a net cash flow perspective within the three areas of our cash flow, and we're just adding them all together. Once we've done that, then we're going to look at building out really the measure that we really want, which is our cash flow value measure, which is us using treat as logic. Think switch true logic, which is akin to in Excel using a nested if statement. Look at this in three parts. So this is a variable measure, and we're defining the variable current item as the step into the normalized column of the template table this time, not the data table, and whatever value we select on a row-by-row basis would be our current item. So basically what we're saying is step into this templated table in the normalized column, and whatever row we step into, that would be deemed to be the current item. And then we're just applying switch true logic. As I say, think nested if statement within Excel. And we're saying, look, if the current item, okay, so if the current item, which we've just defined here as any row that we select within the normalized column of the template. So if the current item equals net cash flow from operations, if it does that, then we're going to take one of the measures, net cash flow from operations, which is this here that we just calculated, and we want to put that measure in that particular, next to that particular row. So in this instance, what it will do is it's going to look at the current item, this section here. It's going to scan this column here, and it's going to look for net cash flow from operations, which it finds on this row. And once it finds it on this row, it's going to say, okay, well, now Power BI wants me to drop in that particular measure. And it does exactly the same thing for our net cash flow from investing activities and financing activities. Again, finds it here within the normalized dimension of the templated table and inserts a measure in its place. So it will then go to find a net increase in cash at the beginning of the year and cash at the end of the year, looking within the current item variable. And once it finds that, it is now putting the measures that we've calculated or about to calculate into those head positions. And so this has allowed us take care of essentially our subtotal section within our cash flow matrix. And this last bit here allows us to populate any of the non-total columns. So let's see if we can pull that up. So for the likes of, say, inventory purchases and a sale of property and purchase of property and equipment, these are non-totaled rows within the cash flow. And the last piece of our switch true logic says, well, and again, we'll look inside out. We're saying, hey, let's actually use a filter. We're going to iterate over the data, cash flow data table. And we're going to look at now our subcategory, which is this, our subcategory within the data table is this column here, which houses pretty much all of the detail. And what we're saying is, when the subcategory equals whatever current item we've selected up here using the variable measure, when this equals the current item, essentially let's collapse the table cash flow data to that current item. So in this instance, we may be looking at, say, cash receipts from customers. And when cash receipts from customers, when the current item equals cash receipts from customers, this table will get collapsed to just the number of rows that exactly match that. And then what the calculate function will do is going to calculate this cash flow value, treat as value that we've just calculated above, but it's going to calculate it over a much smaller table and therefore get a much smaller answer for each of the individual rows within the matrix. Hopefully that makes sense. And then we've just built out the cash at the beginning of the year and cash at the end of the year in order for us to do some interesting stuff within our donut. We've just changed the cash flow value measure that we've calculated up here. We've changed that into an absolute because most of the charting does not do well with negative numbers. And that's really just from a cosmetic perspective. So cash flow at the beginning of the year, again, we've just used a simple calculate function. Again, iterating over the data table, looking at the subcategory dimension. And when it equals cash at the beginning of the year, let's collapse the table to that and then calculate our cash flow value measure. Then for the cash at the end of the year, we've taken our cash at the beginning of the year, which we've now just calculated as a measure, and we've added the net increase or decrease in cash flow for the year under review, which was the measure we've just calculated up here. Hopefully that makes sense. So let's look at the final section. So our final section then is looking at our charting. And really what we're doing here is using most of the work we've done and applying some visual filters to that. So let's actually step into that quickly and see what we've done. So really we'll look at this in two sections. Firstly, this bit here, which was, if we go back here, that's this section here. We'll look at first and then this section here. So this section here is really just using the same matrix, which we can see here, the row index and the cash flow items from the templated table with year in columns and indeed our cash flow value, which we calculated as a measure. That's the switch true measure. All we've done is applied a visual filter to the cash flow items, this one here, and we've said, look, let's just see only our net position and our cash at the beginning and the end of the year. So that's all we've done there. And finally, we have then done pretty much the same with these donut charts. We've swapped out the information a little in as much as we're looking at our cash flow subcategory column from the data table. We're looking at that against our absolute cash flow value. That's where we wrapped our cash flow value with the absolute formatting, such that any negatives become positive, so that visually we can actually see the negatives and positives, if any exist. We've done that, and then we've applied two visual filters to this particular matrix, and the visual filters would be, we filtered on cash paid in this instance because it's cash out. We've also filtered on our cash flow type. So the cash flow category and the cash flow type, we've just pulled them in as visual level filters. They're not actually sitting in the matrix, but we've restricted it to seeing only cash paid in this instance, and we've restricted it to operations for this one. And of course, this changes as we step into these different donuts, because they're looking at either cash out against operations, financing and investing, or cash in for the same three. Hopefully that makes sense. Any questions, feel free to reach out to me. Take care. Bye for now.